Mic check. Okay. Looks like we are live already. That's brilliant. That is absolutely brilliant. Good afternoon, everybody. Hope you guys are doing well. This is just a continuation of yesterday's work that we started. Yesterday, we were trying to figure out a couple of things fundamentally. Okay. There we go. Fundamentally looking forward to kind of like spending some time with you this afternoon as we continue yesterday's work. Yesterday, we're looking at the markets, but then I went on to just teach quite a bit around a lot of things, market capitulation, why price went up on Friday, how to spot it, the psychology at play in the markets. We looked at crypto markets, its timely reaction to everything. And lo and behold, just after that particular war, there was a new headline that Russia was threatening the world, or specifically Ukraine, but really the world, with potential deployment of nuclear, right? And naturally in the pre-market, so we call that the futures market, during the pre-market, things have been tanking, right? Good afternoon, Nairobi, loud and clear. Thank you so much for the mic check there, Nairobi. Blessings, right? So kind of like that's where we are, man. That's where we are from the last time we spoke. And so today, what I want to do is almost pull a bit out of this war drama. All right, it's very, very difficult to continuously be at the throes of market sentiment, right? We can't ignore it, but there are many things that we can do about it, and really focus on the main thing. Number one, there's still big problems out there. Problem number one, the Fed. The Fed is problem number one. The Fed, despite the fact that we are now in a full-out war in the world, the Fed still is in domestic stuff to deal with, right? There's still inflationary problems, which we've discussed many times on this channel, that the Fed is going to have to look into. Inflation, Fed's going to have to do a lot of self-correction. And there are a lot of reports, right, that the Fed has to use to do that kind of stuff. So number one, there'll be ADP on Wednesday. So we want to prepare for that. Or not necessarily prepare, but want to see if we can start to smell the plan from a mile away. Then there's NFP on Friday, right? And in between that, there'll be market volatility. So between Wednesday and Friday, I'm just going to write war. And all these things create volatile markets. Volatile markets naturally have the tendency, I don't know what's going on with my screen. Something weird is going on with my entire setup today. I've been told fiber is an issue in our area. I don't know. All right, but let's see. I'm just trying to sort out my screen there. I can see it looks weird on your guys' side. Jeez Louise, man, what's going on? What's going on? Okay, fine. Sorry guys, it's just that there's a 10-second delay on the live feed, so I'm actually trying to see what you guys see. And I'm waiting to see if you guys can see my whiteboard. Finally, there we go. You can see my whiteboard now. Right, so between all of this stuff, right, believe you me, there's going to be a lot of market volatility, right? Lots of market volatility. And what happens with volatility is markets will move up and down based on market fear participants, but throughout its journey of up and down, price will eventually get to supply or demand, right? So we're bouncing up and down. And so I want to point out the obvious ones. Please confirm if the visuals are back. Better, fantastic. Thank you, Trevor. Thank you, everybody. Right, so I want to work us through the traps, right? So this is what we normally do, on the private Telegram group, just before NFP. I mean, today is a little bit too early, right? Honestly speaking, Monday, low liquid day in the markets, not really the best time to read this. So you want to do this exercise again by yourselves tomorrow. Obviously tomorrow I will be covering the morning London session, so we'll have a quick glance, but you want to do this 24 hours before a big report forms, because between today, Monday and Tuesday, there will be bull traps and bear traps that are set up on the H1, H4 time frame, obviously those 15 minutes, etc. And you want to be able to have a clean read around them. All right, so that's what I want us to do today. We're going to be looking at a total of 9 assets, just to make sure we are fully prepared, right? The 9 assets will be DXY. You can trade that on, platforms like AvaTrade. I've been holding dollar since July last year, right? The dollar buy, and then I added another one sometime last year as well, right? And I'm holding until I get to my governing supply. right? But then, you know, because it's a dollar week, you also want to have, you know, a hedge type of trade on gold. So we're going to look at gold today, and then after that, you want to see how your risky assets are doing, AUD, USD, right? Anything with USD, basically. But then you need to know, right, which way prices, you know, hedging over. So AUD, USD, pound, USD, and for all these things, for the longest of time, we've been waiting to sell. Please remember, and for us to be able to sell Euro USD, it fundamentally means dollar has gained, you know, phenomenal strength, number one, but number two, has come to a higher place on the charts that we've been, you know, technically waiting for. So we got Euro USD, Pound USD, AUD USD, USD Cad for strong strength moves. USD Swiss franc, which I have not traded in a while. Lastly, well, not lastly, but USD Jpy and star USD ZAR. I haven't traded the ZAR in a long time, but yeah. So you guys will pick. You can pick a couple of pairs to kind of like focus on. You can see what's close on your watch list, etc. But for the purposes of War Room number 57, I will be focusing on these assets. I mean, we could throw in a couple of indices, but right now, until there's clarity, I'm just going to be, you know, staying away from these things, right? So now let's have a look at our usual routine, right? Because that's actually important, our usual routine. I'm going to have to be sharing in and out just to make sure that the screen doesn't do whatever it did earlier on. Right, so we've got this in front of us. You can see the pre-market, right, or the futures market. Please help me with gold. Left a buy on Friday and woke up at, should I trade it short term since it's so volatile? Well done, Bongi. I'll definitely have a look at gold. I'll definitely have a look at gold. Isn't it nice to almost wake up to money? Right, so pre-markets, right? So this is the futures market, right? So according to my app, I told you guys about the app. The markets actually open at 3 p.m. Not 2 p.m. but 3 p.m. today. The setups that we take in the senior traders program normally start at 2 for us, right? But yeah, pre-market. So right now, you know, all things being equal, the stock market is closed and will be open in the next 30 minutes, give or take. But in the pre-market, which is the market that's active before the market opens, right? The Dow is down, S&P 500 is down, NASDAQ is down, everything is down, since fundamentally the announcement of Russia over the weekend, right? If you look at the actual markets, it's green because the last trading day for these markets, as you can see, I don't know if you can see clearly there, but it was on the 25th, which is the 25th right there, 25th, right? It was on Friday. So markets closed up green, but right now in the pre-market with all the trading that's happened in the morning from Asian markets into the London session, everything is just down right now, and it's down because of that Russian news. So we could have two scenarios, and a lot of traders sometimes get caught with their pants down, so to speak. Scenario number one is that when markets open, right in the pre-market, markets are going to try and catch up with what happened, right? But you can see here, this is a supply. I'm looking at NASDAQ H4 time frame. Right, there we go. There's a NASDAQ H4, and you can see as soon as price opened at midnight today, the Asian markets, this big red candle was that, taking out any type of support down here, demands, and now markets have been slowly climbing back, right, in the pre-market. Go to H1 time frame, which will be very much linked to the slight activity happening during the London session, right? And anything goes, right? So markets could then catch up with the news, right? Because remember, Americans are waking up to this now. And price could tank a little bit, or we could still be in market capitulation, where it's like, oh God, man, we already have a war, we already have casualties. Today there is a talk, blah, 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 blah. The long short answer is I'm not making any trade calls, especially buying trade calls. I am definitely not an industry buyer right now in this current market. I've been honest about that, and I'm going to stick to that. I don't care how strong the V shapes look. I'm going to ignore them up until I see a trend. So what a trend looks like to me is, number one, we need to take out this sell order block, right? Sell order block 1 here and sell order block 2, which means I am willing to wait. Remember, I already said We are on other brokers. Nasdaq printed a gap. Yeah, a lot of them would absolutely. Man, there are a lot of gaps. There were gaps in euro pound, euro USD. There's so many gaps across the charts this morning. I actually had to try. I took a few trades. FTSE 100 was the only gap I traded in the morning today, like a strong gap to the downside. FTSE 100, like beautiful big gaps, and that's because of that surprise sell pressure, right? Now, I want to be a buyer when there's a confirmation of trade, and so I would like to see these highs taken out. There's nothing wrong with using your own money. You know, there's a long distance, and you could still make money. You don't have to trade exactly how Leroy trades, but I'm a swing trader, so I like to see a clear path. Right now, for all intents purposes, we're in a downward trend. We've got lower highs forming. We've got lower lows forming. Right, nothing about this chart has broken a trend, to let me know that no, Leroy, we're about to create an upper trend. Because of that, I will not be in and out of price every 15 minutes with high lot sizes just to make money. That strategy for me has never worked out for me personally, right? So that's what it is. So at 3 o'clock, we will see how this market opens. To me, again, in front of me is a big bearish engulfing pattern. There's a lot of sell pressure, could be nuclear sell pressure, etc. And so for me, generally speaking, I'm like, would I buy? This does not look like a good place to buy. This opening of the market does not look like a good place to buy. But as usual, I am not your financial advisor. I'm just here to share some education with you. But this is not a good place to buy. If you're buying, good luck, etc. Right. So let's quickly go through what happened. Right. The next 24 hours are crucial for Ukraine as its resistance prepares for renewed pressure. Right. So as far as I know about this war, Russia has got about 150,000 troops, which is 2/3 of its army. That they can deploy at any time. Something weird like that. So Russia it could easily start to beef up stuff, right? Remember, if you're in war, you're going to need ammunition, you're going to need supplies, you're going to need food, you're going to need water, and so everybody needs to keep restocking. Ukraine is on the back foot, pretty much relying on the kindness of humanity, the kindness of its allies. Not that it's important to announce, but as of this morning, 365, I found the government's Bitcoin wallet. They've got a Bitcoin wallet and they've got a Tether wallet, right? So 365 did donate something into that wallet there in terms of crypto, but it's a drop in the ocean. Like right now, in total, Ukraine has like raised about 5 million, so to speak, US dollars in crypto formats. I saw the CEO of Polkadot wants to also donate about 5 million. Elon Musk is providing internet basically through his satellites. Space satellites are notorious because they're not impossible, but very difficult to interfere with, right? Remember, in war, you want blackout, you want zero communication, you want that old stuff, you want to take out the telephone lines. Ukraine is being attacked in multiple fronts. There's not just one border. Like there's about 400 KGB militants whose sole purpose is to find the Ukraine's president and assassinate him. I mean, this has been like the stuff that I say on this channel, stuff that I've really spent a lot of time researching to make sure it's true, right? So there are a lot of things going on. Like fossil fuels are choking humanity, whatever, man. Dow Jones falls 400 as sanctions stem Russia. Big cities targeted by Russia remaining Ukraine despite things. These are all the headlines in the morning. So if that's fine with you guys, I'm gonna go find something better. I always start like this because I want to get a sense of the sentiment on and before. And this NFP trade is gonna be a little bit tricky because I'm not dealing with just market smart money versus dumb money. I'm dealing with sentiment that changes in hours, right? Which is kind of like annoying. Currencies look to chew through the dollar gap, right? So even DXY had a gap, by the way. I know Trevor was talking about. There was a DXY gap that I tried to trade, but unfortunately got there too late, right? Look at this gap, right? So what does this gap mean? You can see here for yourself on the DXY chart. You can see on your broker. You can see how it looks like on average trade, whichever broker you're using. Markets were trading to the downside, right? Markets were trading to the downside on Friday. That's what this gap is. And then because of this stuff, the bad news, nuclear, blah, 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 what does it happen? Like Bongi said, I just woke up and gold is already up there, right? And the reason for that is, remember, your safe havens are literally your avengers. As soon as things get worse, money run. So if you draw a Fibonacci, fib by fib low, somewhere in here, you can see that when markets closed on Friday midnight on the 25th, which was Friday midnight today, markets gapped to the upside, right? Gap, it's just that simple thing. Too much imbalance. It is the most beautiful version of an imbalance. It is literally smart money operating. Remember, you and I can't trade currencies. The only thing we can trade over the weekend is crypto. Over the weekend, smart money moves, right? Central banks move. No matter what they tell you on Google, they are moving money. And this is it. So immediately, there was a gap here. There was a massive ultimate imbalance. Price was pushed up to the outside, pushed back into a supply. Nothing is random. Just because you're going to have gaps and someone's not throwing nuclear, markets are not going to act out of character. Sentiment will push markets to move faster, but markets are not going to act out of character. Gaps into a supply, supply pushes price down. Generally speaking, when it comes to gaps, your gaps need to get filled. Markets don't like inefficiencies. There are different types of market inefficiencies. We get a candlestick that looks like this, and it's a green candlestick, but it's got a very long wick. Just know that the next candlestick, 9 out of 10 times, will be to the upside to fill a market inefficiency, right? To give this wick an equal body, so to speak. Same thing with gaps. When you get a gap in the market, price will slowly but surely, it won't happen immediately. That's where traders get it wrong. It won't happen immediately, but price will slowly but surely work towards covering, filling that gap. Right, so I wanted to try and catch a buy here. I was hoping that because, the gap was so big and vulgar that, markets will try and fill it, for somewhere here is where the demand is. The demand is always at the bottom of where the gap happened, or if it's a supply, and the gap is, a supply gap, so a gap to the downside. So it's trades were here, and then there was a gap to the downside. This gap, always find the supply above it that caused it. So I was hoping to take some buys here, but unfortunately, it looks like markets are already preparing for the next session, right? The New York session, and they might not use that time to fill the gap. They might want to push up. All right, so something to bear in mind. But we'll come back to the DXY properly. It's just that we saw a headline here. So US issues sanctions against Russian central bank. Right. I don't know if you guys have seen, this is kind of like crazy. It's just that I haven't traded the Russian ruby in years, right? And I don't know why my dumb mind on the 24th didn't quickly connect, get into the Russian ruby, right? Because, it's a simple trade. I know Arbitrade has it, right? Look at this. So this is like $1 now is worth 100 and something because the dollar is so strong because the ruby is collapsing. The Russian ruby is collapsing because of all the bad stuff, the sanctions, the bank, the da-da-da-da-da. So obviously, this is just an easy ABC uptrade. And now it's even difficult to enter because you see a gap on a time frame as big as daily, right? That's a problem, right? Your gaps should appear 5 minutes, 15 minutes, but if they're so visible that you can see them on daily, you can imagine the imbalance, and this is a big gap. These are a lot of pips. So someone who bought down here, you see what I mean? There's always a demand before a gap or a supply before a gap. And there was a nice area of value there that I'm not in. No, ma'am. With all the moving pieces in my mind, I forgot about USD Russian ruby, right? But this was an easy trade, maximum standard lot size. You really made a killing, right? So currencies look to chew through the dollar gap, right? A lot of dollar gaps, happen today. Food prices are going up. People spend more on food and less on durable goods, right? We've been talking about this. $100 on oil means recession. It would be unwise to pre-commit on future policy steps. This is the remarks of the Euro Central Bank, right? So are we increasing interest rates? Are we not? We're not sure now because of what's going on in our continent, right? Europe is in trouble, right? Euro Central Bank needs to be open-minded in the March meeting. Remember, everybody has been clear about increasing interest rates. NZD has already done it. AUD is about to do it, or has already done it. One of the two. Dollar, FOMC very clear about it, right? ECB very clear about it. But because the war is on top of them, it's literally on top of them. Now there is that uncertainty weighing in again. We need to be more open-minded. We can't just rush in because we don't know. We don't know what we need. We don't know how long this war is going to be. It's going to be a 30-day outskirt, number one. Is NATO eventually going to get involved? If it is, how many of our countries are now in war? If they are, right, put it this way. I know most of you, when I talk about inflation, you understand that concept very well now, or at least I would like to believe so, because we spent a lot of time talking about inflation on the channel. I just feel like some of these basics we should talk about as traders. Now, I want you to understand this. If there is a war, which there is a war, any type of government intervention will cost money, right? The state, to get involved in war, to send weapons. I mean, if you've seen those bombs, one bomb is like $100,000 US. One military cluster of whatever is $1 million, and you need 25,000 of them. It's a lot of money. But for the state to support a war, the state needs to go back to its money heist principles, which is we need to make money. You got to print that money, right? So all of a sudden, the printing machine might come back. It might only be in Europe, right? America might get involved. Biden might need a win for the Democrats, etc., etc. It really doesn't matter. But the point is, if the money machine is brought back to life and money starts being printed, right, to support a war, you don't change the equation. You make the inflation price equation, wages spiraling equation worse, right? You make all of this worse. And so all of a sudden, most central banks had a plan. All CB, central banks had a plan. And all of them was interest rate hikes, interest rate hikes, interest rate hikes. Now it's like, damn, there's a war. What do we do? Because it's not just about interest rate hikes, right? Remember, your interest rate hike is inside what I call a monetary policy, or what is called a monetary policy. And you have to tighten that policy. You don't just increase the hikes. You also have to stop printing unnecessary money. You have to stop state bonds. You have to stop a whole lot of things. And all those things might be needed in a war. So just remember, when I say the next 2 weeks, especially for dollar pairs, the next 2 weeks are absolutely painfully crucial, because, you know, anything can happen. Like a lot of traders, including myself, might be caught on the wrong end of the stick here. Right, Toyota reportedly to hold Japan factories on the 1st of March. I don't know why. I'm not even. ENP is looking to close the gap. We can look into that, but it's not the job for today. Right, I saw this. So there's some type of negotiation, right? Russian-Ukraine talks in Belarus have started. I don't think the president went. Fundamentally, I think, if I remember correctly, the territory where the negotiations are happening was hostile. I don't know if they changed it. I'm not a geopolitical analyst, so I could be wrong. These guys closed their stock markets. They lost about 600 and something billion US dollars on Friday. All right, so it looks like they will not be opening their stock market today. And on top of that, they don't want, you know, foreigners trading. Just so everyone is eye on the price, it's 740 right now in New York. So the markets are going to open in about 20 minutes, right? Your Nasdaqs and what. Right, Krillin says that he hopes that, you know, talks with Ukraine will start imminently, right? I'm sure. So Moscow is, according to these analysts anyways, is starting to feel the power of the sanctions, you know, so maybe they want to negotiate. I don't believe that stuff, man. Dollar still in a place where money goes, right? Safe haven, greenback. ECB rate hikes, bets paid back, right? So there we go. Euro Central Bank rate hike bets, the speculation, the betting on prices gonna go up, paid back, right? So not much of a surprise. Money markets got ahead of themselves in the first place. So everybody who thought ECB was gonna go 2 basis points, 1 basis point, got ahead of themselves, right? You thought that's what the markets priced in, and it did. Now the markets are pricing a nuclear war. What you gonna do? Like it's just unfortunate. It's really, really, you know, uncertain, right? And I'm gonna stop here, guys. I mean, this happened in the morning. You know, 30% down the Russian ruble. I just showed you the USD Russian ruble chart. Ukraine says main goal of talks. So Ukraine wants, at the end of these negotiations, ceasefire and withdraw. Nothing more, nothing less. Stop shooting at us and get off our land. Right? Okay, let's get cracking. Right. So let's look at gold real quick. As you know, gold is a safe haven. As you'll know, that gold pulled back on Friday when I was away. Why? Why did gold pull back on Friday? Well, it's a war room, not a morning session. And so because it's a war room, we're going to start from the top. All right, in the morning sessions, we have to really consider painful small time frames, but here we are looking at the top, right? So this is what we have. This is our gold chart. Gold has been a little bit good, has been consistent, but moving extremely slowly. And the reason why this asset moves extremely slowly is because, remember, apart from its use value of being a safe haven, there's really not much you can do with gold. And just like Bitcoin, there is only a certain amount of gold in the world. So it's a finite resource. So the more that is mined out, blah, 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 right, the less there is out there. It's going to remove all of these and show you that today is the last day of February. Hope everyone is aware of that, which means in the next few hours, this candlestick is going to close. I'll repeat that. This is the monthly time frame. In the next few hours, this candlestick will be complete, which is then Leroy can then say, I now have two demands above my first entry in 2019, or three demands as during my report. And since this is the case, and this will be the latest demand, I'll then finally be able to break out of that trade and then probably lock profits just below here. I'm holding my gold up until 2200, 22200. That's my target, right? In between that, I know there'll be a lot of up and down, but I'm safe from all of that. Smart money's target is somewhere here within the next 2 years for gold, 2.5, right? I'm happy at 2200, and then I look for a different type of commodity to kind of like pair with, right? But for the most part, gold was reacting to a governing demand and it's created a new governing demand. So there's a lot of bullish upward momentum. For the most part, gold has broken, starting to break out of this weekly range that it was in, right? I did not like this range. See this range there? This one in the gray. I'm going to make this gray for you. I hated that with all my, with all my might and soul, right? Because a range in markets are fundamentally annoying. Right, so markets have decided to go push to the upside and stop trading sideways, and I'm happy with that. Now we get into a part where we had a bearish engulfing pattern, then price reversed and broke it. It's not the strongest demand, but it would look something like this. So there's that right there on the weekly, right, on gold, and then you've got about a silly imbalance, a not so complete imbalance. And there you can see for yourself last week's candlesticks. Literally the other week was this red one, and now you can see market efficiencies, right? Markets are now trying to fill that week. That's what I was trying to tell you guys, that sometimes you get this here and it will look like an evening star price action pattern for the downside, but because of the sentiment in place, remember, gold arrived at a supply. Please, let's this is a real supply. So not only just on the weekly, right, but fundamentally also on the monthly. It's a very, 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 very real supply right here. Strong supply. Weekly engulfing pattern, price went down, and markets are coming back, right? So if anything outside of a war, we all should be selling gold right now. Anything outside of the the type of global stuff going on, we should all be selling gold, right? But because of this new push, almost 4 green candles on the weekly time frame, we've got a new monthly demand, and on the daily time frame, it looks like this. So just like we've explained this over and over again, no matter what happens, trade supply and demand. On Friday, gold made contact with the supply, price started to drop, but we know that this is a heavily induced market, fundamentally around the war and stuff. Now, if I can just quickly find Wongi's entry, which is 1886. Sorry, I was just looking through the chats there. Right, that was so clean. That was so clean, bro. That was clean. Right, so your daily time frame is signaling potentially a new imbalance to be closed by end of day today. Obviously, this will change if there's a headline about how there's been peace or that the negotiations went well, blah, blah, blah. That might change. Now, if you go to the H4 time frame, you get the final rejections right there, which is very nice. And then markets start to swell up a little bit to the upside, markets coming back down. In pre-market, this is the London session. And then right now, just before markets open, gold is starting to pick up again. And Wongi's question is, I woke up at 9:25. Should I just trade it in the short term since it's so volatile? I'll do a short-term trade, Bongi. I'm not so sure how much you're looking to gain, right, out of this particular trade. Number one, this could go completely against you if the sentiment shifts today. Okay, that's number one, right? So if I were you and you're not too, bogged down on the actual money, because some people want to keep all their money. If you want to keep all your money, then it's obvious. Whenever you start to feel anxious, you just close. But if I were you, I'd come here to the 1 hour time frame and then start to have a look. So this is where you've entered. I've marked with this red line. And on the H1 time frame, I am looking at a couple of let's call them good signs for your specific trade, right? On the H1 time frame, I can see a nice bullish engulfing pattern. I can see an upper wick right there with the doji. How are you? Lovely. Right. Sorry guys. I can see a couple of things that are rocking on your side. So if I were you, I would break even. So that's what Leroy does. Leroy breaks even and then goes to sleep. Breaking even guarantees that you can't take a loss. Okay, it doesn't guarantee that you can keep your money. It's not really your money until it's in your capital, right? Not in your equity, right? And then on the H1 time frame, this is kind of like the behavior you want to see in price. So sometime today in the New York session, you really want to see markets break that hourly supply, right? You can see that markets have done a good job of making it weak. Dare I say, markets have probably broken it already, number one, right? So that's a good sign. Number two, you want price to react to sellers in here if they are, right, but not overreact. So this is nice. Or this is like literally the lowest of the low, because this really is a stringent, nice demand, okay? If the idea of breaking even doesn't make you feel nice because you might lose money, then you might want to lock some profits like this. But generally speaking, for me, I feel like it's a little bit too early. I'll break even because, what happens if price decides to come retest this order block that started everything, right? And remember, this order block was made at the Asian markets at a change of a session. So this order block is quite vital to the flow of money for the next 48 hours. This is the bullish order block of the day. And this is the order block that explains why you woke up with price touching about 925, 928 all the way up here. So markets could need some reassurance from this exact same order block. And so for now, I'll break even, just put it just something like that, 885, I don't know, 8890 is pushing it, 8 something there. Just don't interfere with this order block for now, right? But that being said, I'm so sorry, Bongi, this is not really a thing I can tell you. I don't know what's going to happen in the next 48 hours with the war. I don't know if Russia is going to change its mind and go, you guys are right, we're done. I don't know if they're going to launch a nuclear bomb. But I do know that markets are very spooked with Russia's behavior. And because of that, gold might continue to pump to the upside. So it's worth risking zero, in my humble opinion, right? But good catch. Right, so in terms of this week, since we're already on gold, outside of Wong's current trade, I'm going to dial it back to the daily time frame. You know that ADP is coming out on Wednesday. You know that there's going to be NFP. And you know that these guys use these reports and, dare I say, manipulate these reports. In the London session on Wednesday, I'll give you guys my predictions of what I think will happen in terms of ADP and NFP, right? Well, what I think, because markets, guys, no matter what anyone tells you, Powell is stressed out. He needs to use data to justify his next move. His next move was always going to be a strong dollar, therefore hike interest rates. That was always his predictable next move. But given everything that's going on and everything that I don't know is going on behind closed doors, if his next move has changed, these are the reports he's going to use to make that decision and justification. Just so you know that, like, if you can believe that people buy voters, rig elections, please don't ever think that market data points can't be forged. I stay in a country in South Africa where the government goes around telling people that unemployment is at 35%. But as a social scientist, I know it's at 48%. And then they classify it with, oh, we don't calculate those who are not actively seeking jobs. Like, in a country of 60 million, how do you even do that, right? So be careful. My bigger point here is markets specifically when it comes to money, will use data to how it best suits them. Right? When I'm looking at gold, I'm looking at, you know, a push to the upside on the daily, could fill this week. I'm also looking at markets ranging right now, markets waiting. You'll see a lot of this on the smaller time frames on Wednesday and also on Friday, Thursday night into Friday. This is a PCP. This PCP to me signals a lot of things. Number one, it signals strength, the taking out of supplies on my left here, right? That's number one. Number two, could be an accumulation for gold bulls, right? So instead of coming down here where Lira would have loved to buy, I would have loved to have been a long gold here. I haven't been on long gold in a very long time, but this is where I would have loved to have caught this thing. Markets are accumulating right here, campaigning for some buy action, right? And if that happens in the next 2 or 3 days, right, it really could support you know, some of the trades that some of you guys are in. Obviously, if you're trading short-term gold right now due to volatility, this is a good place to get out, right? On the daily, this is a very good place to get out. I mean, I don't know what your risk to reward will look like, but remember, if you break even, then all it is just a whole lot of reward, right? But let's say you went long somewhere here and you had a tight stop loss somewhere there, you know, and you came out somewhere here, right? That's 1:10. That's good money. That's really good money, right? I mean, I never focus on lot sizes. I love it when people focus on the skill. That's good money. Now, will price get there? I think it can, right? As long as the sentiment doesn't change. Why I want you to target this area and nothing above is because then you get into some serious steep sell pressure. And as much as there's good sentiment, you'll notice that even oil, when oil hit a supply, it turned around immediately, right? Because that money there is real stuff, right? They can cancel orders to make space for the current sentiment, but for the most part, you know, smart money is not going to negotiate with this previous order. So be very careful. I'm tightening the supply zones on gold, removing the weekly, and just putting a couple of daily supply zones. So this could be target one, right? Target one is the one I showed you there on the H4 time frame. You see that on the gray, right? But you can see on the daily, it's just the tip of a wick, right? Markets are not just going to come meet this equal high. They're most likely going to want to tag this next supply here, and this next supply is fresh. No, it's not fresh, but it's due for a retest, right? So it's not a fresh supply, it's due for a retest, right? So if anyone is in gold longs and you're not trying to swing till kingdom come, and remember, some swings ideas are just good ideas, but they are not practical. You can't say, I want to hold gold like Lira for the next 3 years from this place here, right? You are literally buying outside a governing supply, okay? That it never works like that. Swing to positional trades are trades that are taken in the direction of governmental flow. So if I want to hold a swing buy all the way to a swing supply, I have to take the trade by the swing buy governing demand. I have to take the trade by the monthly demand, so to speak, right? So taking a trade somewhere here at the top of this area, bearing in mind that this needs to be retested, is a little bit, you know, dangerous, right? So I'll take that short-term trade, you know, from 886 to 9509, 1951, sorry, 1950, and then wait to see. One of those supplies that we pointed out here on the daily time frame could be what is needed to push gold down. Remember this, gold still might need, gold might still need to go down first, because a bullish engulfing pattern 9 out of 10 times must get retested, and that retesting almost happens immediately. Now, if you see that pattern on a big time frame like the monthly, it might not happen the next day because it takes time for price to react to these areas, but price might change direction to make contact with this so-called new demand, which means in the short term, you must be very, very mindful of price coming back here. In the short term, there must be CNBC will start to call all these gold experts. These gold experts will be back to pumping the market. These gold experts will be saying 2,500 is the new target, and we as this hedge fund, blah, 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 are going for it. And all they are doing is they're calling retail traders to start buying, because the hedge funds see long-term push price down, liquidate millions and millions up there, and then push price back up, because this area, no matter who says what, needs to get retested. It's a monthly governing demand, right? So in the short term, absolutely have your fun, but in the long term, be careful that when price makes contact with these stronger supplies, it is not sent coming back. Will the sentiment allow? I don't know. I don't know. Like just yesterday, I thought, you know, everything was going to end with the war, with the negotiations. Then also yesterday, I found out that nuclear is up on the table. This could still be at play to push price down. That's why all I'm saying is break even. But in terms of what I'm seeing in gold for NFP, unfortunately, my answer is very unclear. I'll have to get back to you on the Wednesday morning session. So I'm going to move on from gold. Personally, for me, I'm not taking a single trade on gold, right? DXY, 3 minutes before we open, look at the pattern on the daily. Just outside a daily supply that has received a fresh touch and an ultimate massive retest, we already have a PCP sitting in front of us. To me, that signals buy. I'm a big dollar buyer. I'm sure you guys have noticed throughout the war room. I've been tracking this, quite clearly, and I've been very happy with the positions. I haven't bought, the dollar since 95, right? So this was the last time I added a buy order here, 95. When price kind of like dipped in, I'd already said this months ago that as long as bulls stick above 95, bulls are in charge. And so every time markets come here, I'm happy to help smart money defend, because that's just my conviction. Right? I truly believe in this. But we had beautiful buys lower. This one we took together in last year's war rooms, etc. So I've got 1, 2, and 3 buys on the lower. Nothing in between. I'm still running. I definitely traded throughout, but close, right? Nothing running. And now for the first time in a long time, sometime in February, I finally took another buy right here. So somewhere in here. Now, I have no TP, but I've broken even, all right? And I'm hoping that markets will maintain this trend line defense. So I like to buy on the edge, right? A good order block plus a trend line. That's why I didn't really want to buy and hold this trade, right? Even though price might have come back into the demand, I didn't know that it would, so I didn't. So the only buys that I took were with the trend line support. You can see my white arrow right there. And obviously this demand made a lot of sense because it's sitting on this fresh demand. And then finally now I've added to this 95 mark here. To me, dollar looks a little bit strong, right? Fundamentally, it looks like it's getting ready. It's always weird when dollar is strong just before NFP, normally. Excuse me. And the reason for that is normally if they're gonna use a big strong NFP, all right, if NFP is gonna be positive, dollar will fall that entire week, if not 2 weeks. I mean, let's look at this. This is January. On the 2nd of February, I'm pretty sure we had ADP. I did this yesterday in the war room. So you can see there was a downtrend into the Wednesday of ADP, and then a further downtrend all the way down into this area there where I bought, right? A basic pending order. I wasn't trading NFP, but just a basic pending order trigger. And I think this is literally how a positive NFP setup normally looks like. We bring the dollar down throughout the whole week, if not the whole 2 weeks before that, so we can start a strong rally up, because naturally smart money does not like to buy high, they buy low. So when I look at this, I see that there was that same effect now where price is coming down, but price isn't low enough, right? But price has, in all fairness, has arrived at the exact same ADP levels from last month, right? So what could happen is the only difference is when price arrived at this cluster here, this lower lows, this whole entire zone, so to speak, of supplies that were broken. Markets exploded to the upside immediately last night due to nuclear threats, right? And so in a normal NFP setup, price would have kept falling, and we might have been able to find a strong long-term buy here on Friday, right? Which would have been a good buy to take. Find a good demand on the H4 time frame, find a strong demand and hold. Now markets have reacted to the upside, and markets are slowly but surely coming down. A textbook trade is obviously to trade in this setup there, right? I'll show it to you, right? A retesting of this particular moment there, in price. Although markets look like they're already gearing up to leave, because if you use a Kine Hashi candlesticks, you will actually see for yourselves that the area of competition is actually quite big, right? And this is the area of competition, and markets, technically speaking, have already activated that zone, right? And so markets could be waiting. It's 3 o'clock right now. You know, pre-market session is done. Markets are opening in New York. Good morning, and we should see a reaction, right? So price might start to explode to the upside or not, right? Bearing in mind, we have a lot of gaps to deal with today, right? Lot of gaps to deal with today. This is how big this gap is, from there to somewhere there. And you can see, right, throughout the whole day, markets have done, you know, some type of job to close the gap. They've already closed half of this gap by calming down into it, right? So markets might choose to decide exactly how they want to move. But in terms of NFP, dollar is a little bit, you know, has been falling, but dollar could be strong today because of the, you know, the rumors. What would be a good NFP ADP setup, in my humble opinion, is if we see more downside. So if we see a full filling of this entire gap, so to speak. And this would naturally trigger the same thing that happens every month with ADP, NFP. Euro will start to go up strong immediately. Pound will start to go up strong. And then when the results come out, there'll be a massive sell-off, right? So if dollar could be weak between today's session, you know, Monday afternoon into tomorrow, etc., you know, we could get a predictable ADP reading and NFP reading, right? But if I am to buy the dollar, which I'd love to kind of like add, right? Because after this supply is broken on the daily, we go to the daily time frame, you will notice that there's nothing. There's absolutely nothing except for a layer up there. So after this gets removed, we are running all the way to basically 98, right? 98 US dollars on the DXY, which is slowly but surely starting to become bearish governing territory, right? So this is what it looks like on the monthly. Like, we're getting very close now to some serious dollar bears, right? Who might be ready for some policy changes, etc., right? So just be very mindful of that. But until then, I'm a dollar bull. Until then, I'm a dollar bull, always have been. But I do acknowledge that on the daily there's a TCP, so that might be interesting. What the other alternative, right? Given how strong, if you just look at this candlestick, look how big this candlestick was on Friday or Thursday. So if I was to go like this to that, what did I just do? Right. So if I do an information line there to there, right? This is about, you know, almost $1.40 change on price, and put it somewhere. Let's say markets break this. It would only take one day, one full day of explosion for markets to make contact with the supply. If I got another big candle like that, right? Or one of these 4 ones, 1 or 2 days, right? So maybe between now and ADP, markets want to remove the supply, get the supply out of the way. And then maybe by NFP on Friday, markets will do this, which I think is something worth looking out for, right? I promise you on Wednesday I'll have more clarity. I just need more structure to formulate. But right now, this is a very bullish pattern on the dollar. Right, EURUSD then, let's see what that looks like. Then we can actually draw some strong correlations. Right, it's fine. Look at this weird candle setups, red, and then price goes up, and then price starts down, and then now it's green. This was a red candlestick. The fact that we've got 2 greens, but it looks like the greens are moving on the downside. This was strongly red, and now markets are slowly but surely trying to make their way up, right? So all these sells here on EURUSD have worked out quite well in the short term. I don't think, and this is just me, right? I'm happy to be proven wrong, but I don't think markets are going to make it to where we want them to sell this week. I mean, do you understand how many? This is a big movement for Europe. It can, don't get me wrong, it can. I mean, this is 1, 2, 3, 4, 5. In 5 days, price did that. So definitely, markets can, right? I'm not at all disputing that. Markets can move. What is going on here? Sorry, I'll do that again. Markets can move, you know, that fast, but it just feels highly unlikely because sentiment shifts all the time very quickly, right? But let's say price was to kind of like give us almost a similar ghosting pattern there. Doji over here where price is, markets could make contact with the supply on Friday. That would be positive. For markets to make this supply on Friday, listen to this carefully. For markets to get here, it means on Wednesday, ADP comes back with more negative news. So right now, ADP has toned down its expectations. I don't know if you guys noticed this, but you'll see ADP is like, look, man, we got minus 300 jobs last time, minus 300,000 jobs lost this time. So this time we're flipping the switch. It's almost like a toddler is guessing. We believe that the markets are going to create 378,000 jobs. So we thought we lost minus 300,000 jobs last month. This month, we think we're going to look at minus, we're going to get a positive number of 375,000 jobs. I'll have a look at that for you right now towards the end. Right, but this number, just bearing in mind, is quite interesting. They are low bowling NFP governmental financial analysts. Just be careful, right? Because financial analysts from the government and state, the non-farm payroll, the official NFP, they are going, we got 467, what we think we're going to lose 67,000 jobs. So we're looking at about an NFP of about 400,000. So anything below 400,000, guys, listen, oh my goodness, anything below 400,000, for example, ADP, anything below 400,000, for example, ATP is a negative for the markets on Friday, right? That's how you need to see that trade. Because ADP is the precursor, it's a private company, it does surveys, it's important we look at it to kind of like just judge and almost start to speculate, right? But the official job report is saying 400K is our forecast. Above 400K, markets should go okay. Dollar should be good. Everything is positive. Below 400K, for example, 378, which is what ADP has put forward, problems, right? They're going to be problems for the dollar. We're going to see a dollar drop, right? So something like I keep saying, I'm not happy with this. Unemployment rate on last month was 4%. This month they want to see a 0.1% drop in unemployment rate. So they want to see people, which is interesting, right? You want to get less jobs created, but you also want to see unemployment decreasing. You want to get less jobs because you got 467 last time jobs created. This time you're speculating there'll be less jobs, but you also want to see this unemployment number change. Not only that, but you also had wage prices, wage earnings for people working in restaurants, all sorts of jobs, right? Go up to 0.7%. You want in this modern day economy to see average hourly wages go down. This is a bull crap report. I'm calling it right now. I'm telling you, there's no ways. Why would it go down? Let's open this thing. Let's open this thing. I always tell people this thing is important. So since the beginning of the year, February the 7th, the forecast was 0.4%. It went up to 0.6%. This is consistent with inflation going up, consistent with prices going up, consistent with everything we've been talking about, consistent with the FOMC saying, I'm worried about the wage spiral. And then all of a sudden, the following month, you actually said wages, we forecasted 0.4%, but they went up to 0.6%. We're going to forecast 0.5%, right? And it actually went up to 0.7%. So on month, wages went up consistently. That's simple. In December, you get a negative, which makes sense because people don't work the whole month of December. Look at December. 3rd of December, 0.3, and it's tracking November, right, towards your supply chain and shops and whatever. That makes a lot of sense. But here, I'm worried. I am very worried about this mind game. It's one of those NFP days where I decided to go play golf 9 out of 10 times. Because this is just going to be violent on your account if you're not careful, right? So I've already called some stuff out here. So we're gonna be mindful of that, right? So now EURUSD right now is starting to gear up for a long, right, in the pre-market. And let's just quickly look what the pre-market looks like. No, the actual market is open. It's been 10 minutes, and now we can actually see. Remember, your pre-market futures were down, right? This was your entire pre-market. They were down. Now let's look at US. So markets are slowly but surely tinkering, I think, or if they're not yet opened. Is my app wrong? Fashion said we're back, more than that. That's old news, that's old news, that's old news. All right, we might have to come back towards the end of this forum. I just want to see this correct, because this is still the 25th, this is still Friday. They have not yet updated this, so we'll leave it for now. Right, so look, you know, Euro today is looking a little bit strong, which is interesting, right? So markets gap, this is Friday up here, right? Into, you know, what would call a memory area, right? Well, it used to be a demand, the demand held, markets broke through the demand. This was that 1 hour sell that those of you who came to the, you know, one of those sessions that we held. It was a very good trade, clean 1 hour setup. I'll show you what it looks like. We spoke a lot about this higher level, right? We spoke about not ever giving up this area here. It's on the public Telegram group. This trade has run consistently for 1:10 on Friday. Like I said, I had to go MIA. I apologize. So I closed somewhere up here and I was done with this, right? But markets ran further on Friday, right? And then we've got this situation where price gap. So price closed here. I want you to see the gap. Markets closed here on Friday night, and then gapped to the downside, back into a demand. Oh man, guys, there. So you think price has left, and it has left, and then, you know, the news, the sentiment happened. Markets literally opened here at midnight today, inside a demand, perfect for perfect catch. And since midnight into the London session, right, markets have been trying to make their way up, right, and they are filling the gap. They are filling the gap. Now, once again, on the smaller time frame, just to remind you, gaps are a strong sense of imbalance. Let's delete all this stuff. I'm no longer in this trade. That was a good run. Gaps are a strong version of an imbalance. And so what is very important just to keep track of, just to be mindful of, is supplies and demands, because that's the only thing that moves markets, believe you me, right? So there's a good strong supply there, where markets close and immediately the sell pressure plus the sentiment push price all the way down. If this gap is closed, price will still have to deal with supply. If this gap is closed today in the pre-market, price has to deal with the supply, at least on these smaller time frames. We go to H4, which I don't know why I would do that with all this yellow in place. Is it me, or are we moving a little bit slower than usual? Right? We're only 3 assets down. Thank God we're not doing a full market review. Right, so there we go. So let's go to H4. Let's have a look what's going on in H4. And that's why, by the way, on the daily, the candlesticks look weird, right? Because remember, markets pushed down. So you're wondering, I was wondering, why is the Friday candle green and the today's candle green but below, right? That's why, right? Markets are trying to slowly but surely fill this gap. There is not much confluence on that H1 supply. So H flow is flying solo. It could have been potentially a retracement area. Yeah, look at everything coming together so pretty, right? So where markets gap, it was a golden ratio area, sell pressure ensued. It was an automatic sale, and this was an automatic buy. For intraday traders, these trades are sharp, quick, and just perfect. If you can read the moves quickly, you can see, if you've mastered the basics, you'll know what you're doing, right? Markets are just plain tennis from supply to demand, right? So looking at this right now, I would prefer, once again, markets to come all the way up here to sell. This is my swing sell, but I might not get that at all this time around. Markets could push up, fill the gap, and then fall. That's a strong possibility on the daily time frame. Today's candlestick already has a wick out already. Green candles open at the bottom and close at the top, and already the wick is out. It's going to take a lot. It's already 3 o'clock my time. It's going to take a lot between 3 p.m. and midnight for price to push all the way up, really push this wick all the way up there, and even make contact with this supply. It's almost unrealistic, right? It's literally too much pressure for price today to make contact there, because the wick is out, and now markets are just negotiating where to close, right? So along the lines, we might get a green candle, which is filling this wick here, market inefficiencies. And then tomorrow we might get a continuation of a red candle, right? Or markets tomorrow could open positively green, pushing to the upside. In terms of ADP, NFP, I'll have to get a clear read on Wednesday. specifically for how the dollar is and how euro is going. But for any type of short-term trades, you want to trade the gap up, and then you want to almost trade the supply down on H1, bearing in mind that there's not a lot of money supporting that H1 supply, except for the fact that for sellers, it is a beautiful place to buy something on 61% discount, right? For sellers, this is a good place to buy and resell Euro USD. As you can see right now, this is the buying that's going on. They are on their way up, rebuying it, and soon they might continue the selling. So watch out for this area here. And then on Wednesday, we'll come back and then see exactly how that area looks. AUD USD, this thing has to be bullish. You know, same thing, same criteria, you know, looking the exact same as Euro USD. We spoke a lot about the stuff. Markets rode this was a sell setup here, but markets, you know, penetrated too deeply. We spoke about this in our London sessions, our morning live sessions. For the most part, if I'm being honest, is we need price to get up here. All right, and this is clearer. This is much more clearer than Euro USD. So watch out for this. Price could get here, you know, a little bit quicker. You know, this would be a good place. I would like to attempt to sell AUD USD. I'm still waiting and holding the AUD USD up there. Price could get there. You already got a green candle for Monday. You just need one more green candle for Tuesday, and then you need, you know, Wednesday to be either positive, which would send risky assets flying, right? Because if ADP is positive and they meet their forecast, dollar will be strong, which will naturally send, you know, all these little risk assets flying to the downside if dollar is strong. But I would very much follow the data, right? But this is where I would want to sell AUD USD. This is just an old setup that we've been waiting for, right? And then we've taken obviously short-term trades on that trade, but the monster swing is up there somewhere. Right, if you guys remember, this was the buyer's area. This was the fifth area. So I always write buyers Fibonacci. They came in here and rallied into the supply. Believe you me, here's the thing about markets, 365 traders. This is the supply from the last ADP that I specifically was extremely sure about that markets were going to break through. That supply is still standing strong. That supply, you know, was taking multiple hits, about 7 of them, right? All of these multiple hits here has been holding on, right? So price will surprise you, because remember, with our trading style, your stop loss will not have been triggered, right? I personally am happy with the rules. I never trade anything that looks like glass effect. But listen to the Cowboys. So I don't know if there are any Cowboys who took this trade, but markets really maintained, you know, that fine. This is where it's 61.8% will be for our buyers, but for the most part, the sell area is going to hold. Same situation here, Leroy. Why is there a green candle pointing to the downside, but the candlestick is green? Is because markets on the smaller time frames are filling out those market efficiencies, those big gaps and long wicks, etc. So if you go to H4, you'll see there's a gap in between right there, market separated. If you go to H1, that's what it looks like, right? Markets closed. Sorry, there we go. Right, that's where markets open today. Gap to the downside by 1 a.m. and then markets have been slowly but surely making their way up. And the question is, number one, will this hold? This is a very good place for price to hold. Remember, if markets keep falling or showing signs that supplies are in charge, there's nothing weird going on or nothing tricky. If risky assets are falling, it means ADP is going to be positive. Price is going to meet that 378 target that ADP has set out and agreed to a strong dollar, which means pound USD needs to start falling, right? So this could be the place where there was that gap trading. Otherwise, if you're like me, you're looking at H4 daily and you're thinking to yourself, well, the only way that's happening is to come up there, right? That's pound USD. USD Cad. Oh, before I forget, because I've already forgotten, Trevor asked for DXY 3 months chart. I apologize. I think I can say remove all drawings and then get them all back. Hi, Trevor, and everyone else. This is your dollar 3 months perspective. Right, so strong supply. Right there. Strong supply right there. And another supply, right? And this was a supply that basically gave birth to Trump, right? So price, this is Obama's rally, Obama's 2008, and I don't want to get into specifics, but Democrats love demand, Republicans love supplies. Ironically, Republicans are more war prone. So Republicans, rednecks, right? Republicans are more war prone, protect the republic. But Democrats have killed more people, right? Pro-black, all that stuff, but be very critical in your thinking. Obama killed more people than Bush and them, right? Like war is a real business in America, right? It's not conspiracy theory. It's just all out there, right? And so now we've got Biden. There's Biden's demand here, as a reaction to Trump's drop. Trump and China trade war, right? Created this strong demand. Biden becomes president somewhere in here, and markets are rallying onto the upside. And if I give you a Kinehashi candlesticks, you will note that, look, there's some interest here. It's going to be a nice thinking point for price here, because it means nothing for Biden, right? In the long term, then Biden might bring the dollar back here. But this is also a sign of how bad things are in the world. Please don't forget that. Some of us, especially me specifically, I thought price would eventually come there. I thought we'd done everything. We'd gone through COVID. Things were going to be good. The dollar, the use of the dollar was going to drop, right? Remember, dollar is now 97% useless in terms of what a dollar can buy today and what it could 5, 10, 15 years ago, right? The currency is just weak. But in terms of its efficiency and also what it symbolizes, it's got a whole lot of use value. So markets could push up, but that means, this war is going to turn into something very big and very ugly, in a heartbeat, right? But this is what we have on the dollar front. 3 months chart, and I'll just show you normal candlesticks again, and then I trust that's good enough for you, brother, and I can move on. You will let me know if you need more, right? We need more out of that, right? So back to our next pair, USD Cad. I see there I was trying to buy. So difficult to see with all these lines in play. I do apologize. I've already lost all my beautiful notes on DXY. I'm gonna cry. Right, can I just quickly get all my analysis on DXY? Sorry. Remember, I removed all drawings and I went to 3 months. I just can't, if I forget and wait too long, TradeView won't have that in its memory bank. So it's very important, because I've been trading off those plans and trend lines and notes, very important stuff to me. If you give me 10 more seconds, I'll find it. There we go. So I just want all this stuff back. Right. So USD Cad. Right. I'm going to go straight to the monthly. Naturally, USD Cad will do whatever the dollar is doing. USD Cad has not arrived at anywhere significant where we can start to quote unquote start trying to sell. There isn't a governing supply as of yet. The only one I can see is all the way up there. And so because of that, we are going to have to maintain, life as we know it, like a clear path to the upside. Right, and then there we go, down here. USD Cad, push it to the upside. USD Cad potentially, making friends with potentially a supply, not a strong supply, but a supply nonetheless. Let's go to daily so we can see it absolutely clear. I can see there are a lot of lines in here, probably tracking, 1 hour time frame. I apologize, but basically on the daily time frame, this is what you have. I can just remove all this stuff. There we go, and remove this as well. There we go. Right. So on USD Cad, on the daily time frame, this particular week, price is bullish, was bullish in my humble opinion. Markets have made contact with the weekly supply. Be very careful of that. Markets could push to the upside if they want, right? Or we'll break that down. But for the most part right now, you're looking at an asset that might be prepared to drop. USD Cad is looking like an asset that is now ready to drop. We know that dollar is DXY is outside a daily supply, creating PCPs, or what looks like a PCP anyways. We'll see how the day ends, right? But a PCP is something, a potential continuation pattern where markets will continue the pattern which they were going. If they're going up, a PCP means they keep going up. Now, outside of all of this is a supply right above here on 1291, but also a new supply that seemingly looks like it's been retested. This is chart one. Out of all the charts we've looked at right now, that is giving me, goosebumps. Chart one is saying to me, what are you going to do if this week, because of ADP and NFP, what are you going to do if everything is, negative? Because the dollar will have to fall. That's number one. Number two, those of you who are still holding on to AUDCAD with me, I know we're not talking about AUD pairs today, but if you're holding on to AUDCAD with me, you will see we are struggling. We are struggling to break out and purely sell. Why? Every time there's more bad news, oil goes up. As soon as oil, goes back up, oil had come back nicely to about $92 per barrel or something like that. But every time, like nuclear bomb, or there's a need for an oil-driven trade, they see there, all of a sudden, CAD gets strong again. And so when CAD gets strong again, things like USDCAD struggle to maintain that type of dominating, relationship, the contradiction between the dollar and the Canadian dollar, USDCAD. And so all of a sudden, even though the dollar is supposed to be between A, B, and C to USCAD, USCAD is purely governed by, what it needs to do in the short term, right? So USDCAD right now is formulating two supplies on the daily. There's a big one up there, and there's another new one here. And that's because in the short term, CAD is very strong because oil is doing well. That's number one. But number two, on top of that, there's a supply which might need to be honored, right? The supply might need to be honored. And if it is honored, then we're looking at a drop. If we get a drop in USDCAD, then once again, it means DXY is weak. Then we're going to see a run, in EURUSD and etc. It's absolutely important to understand that. Right, so for this week, all I'm seeing right now is sell pressure, right? I haven't seen anything, strategically overwhelming to tell me to buy. All right, I will have to look at the data on Wednesday and then finally make up my mind. We have seen smart money create a big green candle next to a bearish engulfing pattern. So because of that, we don't really know what could be done to it. But we do know that something here is brewing, right? Markets could be pushing to the downside. So be very careful. I've marked a place to buy for USD CAD. Down there, right, USD Swiss franc. Go to H4. So I see here with the right idea to sell. But I personally think had I taken, remember I haven't updated the spreadsheets anyways, waiting for war. But had we updated the spreadsheet, hopefully I would have been smart enough to take the higher sell, right? Did you guys see how it was before? So before, price looked like something like this, and a higher sell setup would have looked at this and considered this their high point right there. Remember the basic rules of how to draw areas of value. Right, so, you know, USD Swiss franc is also falling, but today is Monday. USD Cad also falling, but today is Monday, right? So you could see some short-term sells here, but when Monday, Tuesday, Wednesday comes, strong ADP, very strong ADP. You know, that's the only thing that's going to get this thing running like this, right? The hope, the renewed, you know, energized sense of energy into making sure that, you know, this happens. But for now, it looks like, you know, H4 daily, H1 might all be working to push price back a little bit lower and lower and lower until markets get to demand, and then markets jump on the new sentiment and positionality on a demand. So personally, I won't be looking for sales, but I'll definitely be waiting to look for some buys down there. I'll not be able to catch those flying sales. All right, so USDJPY is second last one. Right, so USDJPY somewhere in here. This is a weekly time frame. You can see on the weekly time frame there's a Talitha area. Right, this is what we have going on. I really thought this sell was going to run for a very long time, but markets reacted to an upward trend line, and there were a couple of demands there. USDJPY is one of those charts that are very much in line with monetary policy. Monetary policy for the dollar is to increase and expand. Monetary policy for JPY is different. Divergence, you know, correspondent is very, very different, because if I was, you know, in USDJPY here, then naturally take profit should have happened somewhere there on H4. That's number one, right? It's a clean trade setup. It was called in one of these war rooms. It's worked out. I want to buy this thing because of monetary policy divergence, but the only place I can buy this trade is all the way down there. And I don't know if price is going to remember and come back for me down there. But in terms of this week, right, you have to look at the supplies that price reacted to and make a call. So this supply here is a great, but unfortunately, markets almost broke it, like thoroughly exhausted it. Now, the next supply is you look at the swing low, swing high. Come on, come on, come on, right? So I wonder if price is not reacting to that over there. That's my, oh no, I need that. That's pretty much what I'm thinking. Markets potentially might have reacted to something here, like that. Okay, and markets are dropping in the opening today from that similar, you know, supply area, right? So we've got a case for across the board, some serious dollar weakness. Dollar is definitely reacting to that daily supply and prices. And this to me looks like a gap that eventually got filled. Does not look like a normal candlestick. Oh wow, no gap. Okay, that's interesting. I have no idea what this is. Right, but for the most part, this thing is going down, right? So you want to let it go down, but you want to be very careful how long and how far it goes down, all right? But right now, markets are dropping here on USDJPY. I won't necessarily be involved in buying or selling USDJPY until I see ADP data. I personally am a USDJPY bull, so if I ever do decide to start buying it again, it'll be here. Like that, right? And then after that, we wait. We wait and see if markets can climb all the way back up, right? But on today's Monday, I just want to keep reminding people that on the H4 time frame, getting there and doing that all at once is possible, all right? Today is just Monday. That's USDJPY, and the last chart of the day is USDZAR. Earlier on, I thought I was opening USDZAR. Right, so USDZAR, price is really moving back up, right? Markets went there. Markets, why did price turn here, Leroy? Sure, there was an explanation. And there we go, weekly supply, strong weekly supply. Right there, markets dropped, markets came back, markets dropped, and markets now also made, you know, an effect of a weekly demand. There you go. Sorry, guys. I'm just thinking. You see, the problem here is we've got a couple of zones, right, underneath USDZAR. And this catchment here is not strictly on top of a strong demand, right? So you could do this, and then you would start to think, okay, fine, price is falling. And this is on the weekly time frame. That's why it's important, right? There's a demand here, you know, the whole concept of buy low. So I was just counting levels quietly, but I don't know. I don't know if this will hold, right? I can see this week. Remember, today's Monday. All these strong green candles on the weekly will change by Friday. This means nothing to the markets. This was this green and it ended up red last week. Look at this. Today is just Monday. So markets have just taken today's buying, right? Today's buying, there is a nuclear stuff. By Wednesday, Putin might say, look, I've locked up the silos. There's nothing. Right. But the part of the Russian ruby is almost the part of USDZAR without the drama. So that massive jump where $1 is now trading at 100 and something Russian rupees is not what I'm saying is going to happen in the short term. I'm simply saying dollar in general is stronger than ZAR, right? So we're expecting to come back to 1:16, somewhere up here, right? That's where I think we will go back to by second quarter this year, right? So after March-ish, and we might even get back to the 1700s, right? We've got a whole major turning point supply update to mitigate. But for the time being, this to me is not clear, right? So if I go to the daily, I won't count these ones down here, but on the daily, for example, you could tuck this area in like that, and then you could also, you know, add another area here to say, look, well, it was touched, it was fresh when my price came back in there, right? And then you could do something like this and say, okay, fine. And then price explode, right? But the point is there are three demands, right, on the daily, like demand upon demand upon demand. And that's interesting because right now, if you're watching this, it's a mixed bag. You guys saw USD Cad, USD Jpy were going down, right? But USDZAR against exotic and weaker currencies, dollar is still gonna kind of like, you know, continue with its plan to keep going to the upside, right? So it's a quite a nice mixed bag for NFP. So this is all that's going to go into my watch list for Wednesday morning's live. Fundamentally because I want to see if I can catch a trade. There's a nice break of market structure on the H4. Go to the H4. Yeah, this is definitely going up. USDZAR is definitely going up. Clean trade idea about to happen right now. There is a lower demand somewhere down there where price might come back, you know, to that lower demand here and say, look, I'm here to collect some money, right? But for the, what did I do now? Oh, right. But for the most part, markets are ready. Markets are ripe to go up. So be very mindful of that, right? Cowboys should probably be opening some buy trades and going. You know, it's really, you know, dealer's choice. But this is the kind of like stuff I'll be looking into. Everybody, I hope this was useful to you. We've got a bit of both, a mixed bag of buy and sells. Obviously, for dollar pairs, this is our heartbeat, man. We keep track of the DXY. We know the DXY. So the DXY is falling a little bit deeper, Like I said, you know, it might want to fill this gap today and tomorrow. Use this time to fill this gap, right, all the way down there. And then ADP might resuscitate, you know, the dollar. So for it to resuscitate, if dollar is poor by ADP, we're looking for a positive ADP, right? If dollar needs to become far much more worse, it'll give us a negative ADP and a positive NFP. But FOMC is looking closely at these particular remarks, right, ladies and gentlemen? I think I've done exactly what I wanted to do with you guys. If you want, quickly scan this client sentiment, which is right here. Right, most people are mixed, do nothing yet. Mixed. USD JPY, all right, there might be somewhat of a bearish signal, right? If most people are selling, so you might soon want to start looking for some opportunities of the opposite. This is a contrarian type of trading setup, but for the most part, being Monday, most market players are doing nothing. We all want to wait and see. Euro pound is the only big signal here, right? A lot of people are buying Euro pound, so it might be a good idea to look for when to start selling, all right? And this will probably be more beneficial for intraday traders. But there we go, Euro pound. The session opened with gaps, right, into this clean 9 a.m. type of thing, into this supply that was broken on Friday night, right? There we go. So the supply was broken here. So actually, you should just remove it, right? All these supplies are useless to us now. And then markets fell all the way back down here, right? So, like I said, it's a good time to start to look for potential sell setups, right? One might consider selling somewhere up there on Euro pound, which is above any and every other supply. I think this supply, it might be in line with something here, but it's slightly above, meaning this broke all the supplies, which means this pump was quite strong, right? This little running leg here on Euro pound was disastrously strong. But yeah, I just wanted to make sure I get a good sense of where the dollar pairs are. And now that I do know that, we can start to slowly but surely prepare for some trades on Wednesday and Friday. I hope this was helpful. I hope you guys enjoyed this. If you did, please don't forget to like the video. Thoroughly appreciate you. Good luck, traders. Stay safe. Protect yourselves. And prayers, obviously, to everyone in the world, specifically Ukraine, with all the conflict going on. Right. Cheers, everybody. Shake my hand. 365. Goodbye.